Morning folks, I'm James. Welcome to the channel. I just got back from the beach and I was chatting to some guys. It's literally 90 meters from my house. I was talking to some guys going out for a surf. I had a look and I asked them what the conditions were like in their opinion, and their response was this: very large and choppy in between the sets, but the sets are a bit slow to come in, and when they do come in, it's worth the wait. So a lot of choppiness and confusion on the surface of the water with quite big swells and chops, but in other words, like noise in the markets. But when the swells come in, there are some good swells that can be picked up. And I think that's pretty much what the market's going to be like in 2025. We're going to see a lot of chop, a lot of volatility, and not all of it is going to be directional. What we actually want as swing traders is lots of volatility, but directional volatility. And in these sorts of markets, we could expect lots of volatility, but lots of chopping around in large ranges, and therefore making it very difficult to identify the bigger, more permanent directional swells amongst that. That's what our job this year is going to be as traders. And I think there are a couple of themes that we can look at. When it comes to the stock markets, I feel that we're going to be largely in a large, choppy, maybe slightly angling down range. Currencies, I think we're going to be stuck between $100 and $110 roughly most of the time, maybe with spikes outside that for the US dollar. I think bond yields are going to come down gradually, but it's not going to be fast. And I think energies are also going to be down to the low side, except for one, and that might be uranium, and we're going to look at that today as well. So with those ideas always top of mind, as Corinne Jean-Pierre like to say, we'll look at the markets very quickly now, and I'll give you a quick rundown of what I think is going to happen. I've also put all this up on X this morning and yesterday, so you can go and check that out. My handle is ArcisFX. I'm going to quickly look at the NASDAQ, and as a stock example, we have a tweezer bottom at the 200 period moving average into the support block. We did break down through that level there. We did pierce that level and the 200 period moving average, but bounced back yesterday. We formed a tweezer bottom. Actually, it's better seen on the SPX. Let's have a look at this one. I'm just going to seamlessly switch between the two because I'm seeing the same thing. On the SPX, it's better seen. There's the 200 period moving average. Look at the tweezer bottom. We broke down through that support level formed by that previous swing high, but only to the 200 period moving average. And I put up a chart on X this morning showing the stochastic as well, which is oversold below the 20 level and turning up. So we have a couple of things going for us for a bounce here. The tweezer bottom off the 200, always a trade I'm willing to take. We only visit there once every couple of years or so. So that's in our favor. Tweezer bottom obviously is a reversal candle pattern. And we're incredibly oversold on the stochastic, and the market is in extreme fear. So we're all set up for a bit of a bounce. We have corrected 10% on the NASDAQ. Not sure how much here, maybe 7 or 8 or 9% on the S&P. So for today, cautiously, I'm long. At the same time, I'm also short on the German 30. Before I do that, quickly, we have a long on Tesla, we have a long on Coinbase, and that's it in terms of stock names. And when it comes to the European stock market, we're short on the DAX. There's our entry level at the red arrow. We did spike up a little bit today, but I think that's going to be okay. There are a number of reasons for this, mostly based on the fact that we're incredibly overbought. We're above the top Bollinger Band, way away from even the 20 period moving average, and we formed a set of 3 reversal candles over the last couple of days. So really just going on that, there's nothing over the top of us that would give us apart from maybe Fibonacci extensions, which are always sort of made up in my opinion. I do go with Fibonacci retracements a lot, but Fibonacci extensions, sure, sometimes they work, sometimes they don't. But it's something that you kind of hunt for. So when it comes to German 30, I'm not looking at any of that sort of thing. I'm just looking at price action. And it's also a bit of a hedge against my long NASDAQ trade. So I'm long NASDAQ, short German 30, but long on Tesla and Coinbase. The dollar index has obviously fallen through the floor. I don't want to dwell too much on this. I suppose we'll get a bounce at some point. There's the 200 period moving average. We've broken below there. We've closed well below there. We've got 3 down days with no retracement whatsoever. So I suppose we could get a bounce back up to the 200 period moving average. And that's almost 100 pips above us. So expect maybe something like 50 to 60, maybe even 100 pips pullback in the euro and the pound today, and then a resumption of the upward trend. Same with the dollar yen. It's taken its time to catch up with the dollar index moving down. Stubborn old dollar yen, but we've now broken down through that recent support. We are at the bottom Bollinger Band though, so any bounce in the dollar index will probably be seen first in the dollar yen, and we could get quite a strong bounce from here as well. So be careful of that if you're short on this one. We're kind of hedged on this trade at the moment, but I'm looking for a bounce back up, perhaps to the 20 period moving average on the day chart here on the dollar yen, and that's all the way back at the top of this slightly minuscule range and this swing low. So it's a good area actually. That could take us back to around 150.80, something like that. We're currently at 147, so we could get a massive bounce there. Although it sounds like a lot, 300 pips, it's the dollar yen. So the pip value is not nearly as much as it might be on the pound or the Australian dollar yen. The Australian dollar yen, I also quite like this long. I took a personal long trade on this 3 days ago. I bailed out of it just for a small profit. I'm not totally convinced, but perhaps if we get another dip down to the 50-period moving average, this red line, and then another daily bounce off there, I'll get back into a long trade on there and call that out in my live trading room. Bitcoin's a bit of a bounce, and as is Ethereum, not nearly as good as Bitcoin, and XRP, just trying to reclaim that channel, trend line really, not really a channel, but a decent trend line, a proper support level. We've held above it most of the time, except for those few days during the Bitcoin dip. We've now reclaimed it just today, and with a bit of luck, we can hold above there on XRP. My target for XRP is about $5. My target for Bitcoin is about $160,000, but we're still in jeopardy. We've had lots of opportunities to get back longer here, and we've done so. There's the 200-period moving average, which we spiked pretty much very similar to the NASDAQ actually, or the S&P, not dissimilar. A double spike low, not a tweezer bottom, but a double spike low, and just trying to make some progress. I do like this reversal pattern, even with that large downward clear out. So I like the fact that we had a massive clear out, and then a relief rally, and then another mortal blow, or fatal blow, to those longs who were hoping this would carry on, and we retraced 61.8% of the entire move back up again. So a massive pullback down again. We dropped even lower the subsequent day, back down to the 200 and below, and then we've now bounced. So it's still not out of the woods, and we've got all that stuff above us we've got to clear through, starting with this upward sloping trend line and this downward sloping trend line. We're aiming into the corner of that as it looks right now. And that corner is also an important horizontal line, so it's a really, really important zone, that right there. There's a sort of a mini triangle, which I'll put a circle over, and I'll leave it in red, just meaning danger, and I'll draw you a little path as to what could happen. Really two possibilities, either this one up to that zone there, I think we will try it, and then back down again, something like that, and that would need to be in red, so let me just change that quickly. But I think the most likely scenario is possibly something like this, and then a burst up through there, back up towards this all-time high. So I'll make that the green scenario. So it's either one of these two, but I do think we'll get into that little triangle apex zone there, and that's at around about 96,000. So a really, really key level there. We're currently trading at just under 91. So if we get up to 96, be careful. You may consider taking off some profit or hedging, or just being a little cautious there overall. Now, there's one very interesting trade. I'm going to talk about nat gas a little bit, but the first one I want to talk about is uranium. Now, you know we've been long on URA for some time, getting in on the dips and out on the rallies quite often. But now I've got the uranium weekly UX1 shriek, as they say in mathematics. That exclamation mark is called shriek, UX1 shriek on the weekly chart on the COMEX. And this is uranium, folks. These are uranium futures. And look where we've got to now. This is the weekly chart. If you go to the daily chart, you can't see very much because we get the little tiny daily blobs. But if you go to a weekly chart, you can see it much easier. There's the 200-period moving average on the week. Super critical, super key level. The blue zone there is the entry into the 50% retracement zone of the entire move up from this last swing low. So we've moved up, made a big peak at 105 to 107 in 2024, and we've dropped all the way back down to 64 and some change. So it's the 200-period moving average. It's also the 50% retracement. The two strongest indicators on any chart, let me emphasize that, the 50% retracement and the 200-period moving average are the two strongest levels on any chart. We pulled right back into both of them. They're in confluence. Not only that, but it's also a previous swing high, and the price is currently resting right on top of that previous swing high. So this is all set up for a beautiful long. I do believe in the long-term future of uranium, and therefore uranium stocks and ETFs and mining companies, and URA tracks a lot of those companies. It's an ETF traded over at the ARCA at NYSE. And look what happened a couple of days ago. We bounced off that existing double bottom. It's now a triple bottom. We've made quite a good rally. In pre-market, we're holding that level pretty well. And if I zoom out on this chart, remember this is the URA ETF. It's not uranium futures, which we had a look at just now. So we're right at that now triple bottom. We have bounced off it, and we're looking for a move back up into recent highs at about 34. And then in the longer term, I'll switch this to a weekly chart. That's when we had that big rally in uranium in general. And I think we could burst up through there and make our way up into some of these higher levels. Longer term, I think this is either a buy and hold if you're a buy and hold type trader, or if you're a swing trader, it's definitely buy the dips, exit on rallies, buy the dips, exit on rallies on uranium. So that's my idea on that. Whether it's right or wrong is really irrelevant, because if it's wrong, I'll stop out these trades and have to rethink. If it's right, I'll make some money. Pretty simple, nothing really complicated about trading. This is natural gas. I did a long video on this yesterday, so I'm not going to repeat it too much now, but nothing has changed since our second tranche. We'll link that video at the end of this one. There's no point in going over it again. We're holding up here pretty well, although we've rejected a couple of times now, 3 times off that level, and I'm hoping for a move down. If we move up through that level, at some point I will hedge my entire trade and wait to see where the top is, and then exit the long side of the trade once again, add some more shorts, and wait for it to move down. We are at a very high price. The average price this time of the year is down towards $3, $3.20, and not $4.40. So we're well over seasonal price. I've covered this in my last 2 previous natural gas videos. I've spent quite a lot of time on natural gas recently because of the difficult moves and people have been wanting to know. Now, Brent Crude is another one that's really interesting. We've broken down through Moab. That's so Moab is the mother of all breaks. It's this orange block here. You can only get the Moab into the right place if I zoom right out like that. But there's Moab. It's this long-term support level, and it's made up of 2 zones really. That top part where the green line is, and then the bottom of the yellow block. We broke easily and swiftly and cleanly like butter through that top level, and we got to the bottom level. We did the same there. We broke right through it. I don't really want to move that red line for a reason I'll show you just now. We bounced down to the red line. I don't know why. It's just a random red line, an arrow, but we got that far down and bounced back up again. Now, that was always likely to happen. If you look to the left-hand side, you'll see that's happened on a couple of other occasions, just getting down through Moab and bouncing back up again. But we have a long-term downward channel. These are all the places that we've been selling oil at for the last 2 or 3 years. We've not been long that I can recall once. So we've been selling on all these rallies and exiting on the dips. On this occasion, I've not exited on the dip. I think we've got a really good chance of breaking down through this Moab level, down through $64. I think the low that we got to was 64 and something. And then once we get down through there and close below that level, I think we could get closer to $50. Now, that doesn't mean we're not going to bounce around and chop around a lot. Look what oil does in its natural progress of trading. Lots of jiggering and pokering, bouncing around. And we're in this long-term, downward facing, not quite long-term, but slightly long-term channel. And there is the path that I expect we'll take. That'll take us down to 55 or thereabouts, maybe 58. And then a bounce back up to Moab, and then a continuation. It's not going to be that smooth. It'll be something like we've seen over the last number of years, and like we always see on oil, very choppy, very messy, very much like what that guy was saying on the beach this morning about lots of large chop, large swells, in other words, large ranges, large messing about zones, and then occasionally we get a directional move, and those are the ones that we need to spot. Those directional moves take place at the 200 period moving average or some of these shorter term ones, and also at the top of the channel. We've been taking them all, waiting very patiently over a couple of years. We've only had 10 main entry points on our WTI shorts, and we've exited these trades at the bottom most of the time. My private group members will realize that. Always wanting to hold on a little bit longer, but we've exited every time with quite a lot of discipline. Not on this occasion though, and I'm hoping that even though we might get a bounce back up to, let's say, 87, 88, maybe even back up to the 20 period moving average, closer to $70, something like that. And really, even we could get a spike right back up into 71, 72. I don't expect that to happen. I think we might get a bounce up to 67, 68, 69, maybe 70, and then a continuation of this move. And I might even add some more shorts on if we do get those pullbacks. And I think I might just end this video on that note. Although, let me quickly look at one more thing. 10-year yield bouncing back up into the channel, which is going to drag TLT down. Told you this would be slow and choppy. We've already taken quite a lot of profit off at the 200 period moving average. I still got some positions on this, but maybe I should have taken them all off by the looks of things. We'll see how it goes, but we did get a good chunk of profit off there. And then going across to softs and grains, let me go through the charts one by one very quickly. Sugar, we put a new long tranche on over there, looking for a move back up to the top of the channel and then through to exit over there. Pretty simple. Cocoa, all looking good really. We're just holding for now, waiting for this move to continue. I said we'd bounce around. We may even get a bounce back up to the yellow zone and maybe even slightly higher. That could take us back up to, I don't know, maybe even 10,000. I hope not. We're trading at 8.5 now, so we don't really want to go all the way back up there, but certainly a bit of bouncing around here and then towards our exit point at about 7,000. Once we get there, I expect we'll probably bounce again and faff around in here for a bit. But longer term, I think we'll get down to the next trend line, down to this channel bottom once we break back inside, and then back down to more sensible levels in the 3.5 to 4,000 sort of range. So that's cocoa, and that's going pretty well so far. On coffee, there are A few people getting a little nervous about this retracement on coffee. Let me show you where it retraced to and what we did. So there's the Fibonacci retracement level, 78.6, always my favorite Fibonacci level. If it does turn at the 786, which it has done so far, if it does turn at the 786, the move is always likely to be a strong and powerful move. The 786 is the last chance Fibonacci, a great place for reversal. When it does reverse, there's so much relief that it pushes the price down much faster than if it reverses at the 50% or the 318. So the next move should be a move back down to the bottom of the range and then down towards this channel line, which is our exit point somewhere down here. I haven't quite decided yet, but I'd like to get back in towards at least the center point of this channel. So we did put another tranche on there yesterday at the retracement to the 786. You don't get much better than that. We got in a little bit early at the top of that candle there and this little gap, but we did get to the 786 Fibonacci eventually, so all good. We're also long on corn. We took another tranche at that trend line. We might add some a little bit later on. That's a very small position, not too worried about that. We're also long on soya, trying to make a little bit of a bounce here. All of these, I'm willing to add some more long positions. We're not full up yet, but we've got 3 tranches on soya right at this triple bottom, and we're trying to reverse above that right now, not quite getting down there. On wheat, we took another long tranche as well. We've got one from, let's see, over there. That's a long time ago, going back to August last year. And we got one slightly higher up on that retracement, and we took one right there. I expect wheat will find support here, maybe a retest to the top of the channel line again. I hope not, but a bounce off here would send us back up to this order block and then hopefully up to about 700. That's the sort of target for wheat. And then orange juice, we also went long, looking for a mean reversion play here, bouncing up off that support level. It's done pretty well. We're in profit on this from that level down there. You can look at the number on the right-hand side, but I'm looking for an exit at about 350, something like that, on orange juice. After that, I'm not too sure whether that'll continue on down or whether we need a bigger bounce on that after that huge sell-off. And finally, cotton. A lot of people like trading cotton, and we've been trading this one for a long time now, going all the way back, our first tranche in October last year, and we've simply been adding at the bottom of the channel every time we make a new low. We did take a couple prematurely there, but adding at the bottom of the channel. The last tranche we took on Tuesday right at the bottom of the channel, and we've gapped up nicely since then, at least back into inside the Bollinger Bands, which is a start. It's something, at least. So that's it, folks. Below this video, there's a link to a survey, which I'd like you to click on and take a minute, literally a minute of your time to enter the survey. I'm releasing a natural gas course this month, and if you'd like to give your ideas on what should be in the course, your thoughts, that'd be greatly appreciated. And also make sure you subscribe to this channel and also follow me on X at ArcisFX to make sure you don't miss updates on the natural gas course. And towards the end of this month, I'll be letting you know more about that. Take care. Have a great trading rest of the week. Speak soon.
My charts and graphs laid out on the table. Swing trading gold just as long as I'm able. Watching those candlesticks, hoping for a rise. Gotta stay sharp, keep my eyes on the prize. Stocks on the ticker, every second counts. From energy giants to small cap amounts. Day ends in green or red,